number was not what markets were expecting. We were hoping for more good growth from the hitherto impervious Chinese economy. But I think the reaction will be short-lived. Yes, we won't see any new stimulus, but they'd like to ease off on any tightening measures they may have thought about. And it really is, I think, just a changing of the guard. Now that new leadership is in, they can ease off slightly on growth expectations, really, from China and just see where they are and where they need to deal with the problems in their economy. And the
FTSE Euro First 300 just opening down around 0.25%. Let's move on to gold, officially in bear market territory now, down more than 5% on Friday. It's been absolutely hammered in the last few days. Why is that?
Well, exactly. Something of a rout in gold prices, really. Investors, I think, really showing that the theory that monetary stimulus is linked to the gold price is really sort of easing off now, finally, after about 4 years of this. And I think it's a degree of technical selling. Gold finally gave way on those lows that had held since late 2011, around the 1565 mark, and now really just a bit of technical selling. But of course, it depends on where you look and your perspective. If you're looking from a far longer time frame, then the bear market in gold, yes, has started, but it really hasn't dented the long uptrend.
I'll put you on the spot, Chris. Just before we came on air, I checked. In the last 30 years, how many days do you think gold has fallen 5% or more?
I would guess it's not that many in the last few years, really. What is the actual number?
In the last 30 years, 10. Just 10 days.
Just 10 days.
So quite a move on Friday. Let's finish up on Eurogroup. They've approved the bailout for Cyprus, as we expected. But Germany's saying banking union will require changes to EU law. Overall, the summit, in your view, is an entertaining fudge, I believe.
I think that's the view to take, really. It's too much of a backward looking. We had Cyprus finally dealt with, and also a pat on the head for Portugal and Ireland for the progress they've made. But the worries now shift to, yes, the banking thing that Germany is once again talking about, and also Slovenia. Is it the next crisis? And whilst I don't think it is, I think the worry will continue to stalk markets, and we need to see some helpful comments, not those unhelpful comments we had in the wake of the Cyprus bailout, if markets are to remain calm.